Welcome to Daily Tax Minute. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Today's topic is a mess created by day trading. And this episode, a warning, is going to be significantly longer than a minute because I'm first going to just go over the basic tax situation for day traders. Second, uh, tell a story of a case that I handled a couple of years ago that may serve as a warning to some others that may want to follow a similar path. All right, so day trading. The concept is commonly used from a tax and legal standpoint. It's fairly simple, but it seems to confuse a lot of people. So that when we say a day trader, we're talking about someone who considers himself to be in the business as a ongoing day-to-day ongoing venture to make money at trading, usually stocks, but it could be something else. So they consider it to be a business. Now, the rules for businesses, the tax rules for business are different than the tax rules for what are called passive investors. That is, if you and I were to buy a stock and sell it, we wouldn't consider ourselves to be in the business of trading stocks, for example. So the distinction has to be made. And how does the government make that distinction? Just because I wake up one morning and say I'm going to be a professional stock trader today, does that make me one? Does it make me eligible for the tax rules and procedures of a business as opposed to a passive investor? Well, it's a good question. So the government has a very standard procedure, and it's the same as you've heard us talk about in other areas of taxation. One, first step, we make an election. We do that in writing in advance. We tell the government, I'm going to be an active day trader. Then, after that, we actually do our activity. We run it like a business. There actually has to be documentation that proves that we are actually doing our activity, our trading activity, business in a business-like manner. So those two things, and again, that's similar to what we've talked about in other areas of tax law. Those two steps are necessary. So after that, it's fairly simple. You do your bookkeeping and tax reporting the same as you would for any other business. In fact, it might be easier because your trading company, your investment company probably does all of the bookkeeping and accounting for you and just sends you a statement at the end of the year. So it's fairly simple and straightforward. You just have to keep track of your things like telephone or computer or subscription bills to round out a profit and loss statement. So uh, that's it for the tax situation. Let's talk a little about day trading as a business. So the published data, the data published by the investment companies says that 1 to 3% of people that are doing day trading are resulting in a net profit, which means that 97% or more are losing money. So that's the case, and it's the same case, with professional gamblers, professional poker players. The majority lose money. Some make money, and it can be a legitimate business for those few. So in this case, we'll wrap up with a specific case. I had a young guy come to me, and he was a engineer for the software company, good salary, good income. Fortunately, single, or he would have, I think his spouse might have run away. But in this case, he was a single guy with a high salary, good income, decided he was going to go into day trading as a business, did not make the tax election, lost a ton of money, kept trying to make it up, wound up not paying taxes on his regular earned income. And I don't recall if it was W-2 or 1099 contractor. I don't recall. But in any event, he went several years of not paying his federal or state income taxes and was going deeper and deeper into debt. And at the point where I talked to him, I think it was several $100,000 that he had lost in day trading, and he was pretty down and out. So his question was, can I now go back and claim this as a legitimate business and write these losses off against my other earned income? And the technical answer is no. And the answer is always there's nothing preventing any taxpayer from going to court and pleading a position that's not the way it's interpreted by the IRS according to the law. We have that right as citizens. However, I was not encouraging him. But the point was, he couldn't even come up with the money to pay for an initial consultation. I think the work I did was wound up being free, gratis, because he was so broke at that point, just struggling to get by. He had run up all kinds of other bills and was in desperate situation. And I've not talked to him since. I imagine those tax debts are still there. I imagine that they will eventually attach his wages for the taxes, and this young guy will have to work through those problems before he can move on with life. So I'm hoping that just sharing the story serves as a warning. Day trading sounds sexy, but in the big majority of cases, it's not a winning business plan. Maybe I annoyed somebody with the comments about day trading. If you are a believer, would love to hear. I'm easy to reach on social media, or if you want to talk one-on-one with any private issue, that's easy to do also. Find me at taxproblems.cpa and schedule a call.